The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman. This is the 8 a.m. time frame, but this is my usual show at noon. I'm just pre-recording it at 8 a.m. We've got the futures telling us pretty much what should happen the first couple of hours. The Dow futures are up 279 at 24,444. Here's the chart of the futures. I believe that we made a sell mode in the daily. We've got a sell signal, pretty much a sell mode in the weekly chart. Monthly chart is in a leg E, and this kind of corresponds to the Dow. I'm anticipating, as I said to my subscribers to my opening call daily newsletter, you'll see that on the front page of TFNN, on Friday, that we're about to make a sharp reversal, and we actually went long Friday, got stopped out for just a tiny 0.8% loss. The market then careened to the downside before powering higher with a whopping move, 800 and something point move to the upside by the close on Friday. That, I believe, is, so I'd been discussing last week internal low, and now we've got to wait for a residual low. And it's like an earthquake and an aftershake. So what we're looking at is the context of the low that was made in the, now I can go to the cash just to show you what we're looking at. INDU. The cash Dow it made a low of 23,360. That goes back to the November time frame. In the weekly chart, you can see it right here, 23,242. Never quite got there, but that was the area. I've got that yellow rectangle to say this is going to be important because it's like a fulcrum. Well, we've come down. Now I'm anticipating a very large arch-shaped pattern. The volatility index, I just don't know what could get the volatility index back to the level that it made at 50.30. Really, that was just nervousness about rates and the government shutdown and all that. But that's nothing like the China spike to 53.29. And that's nothing like, if I can pull back the VIX index, to other periods. Look, that Greece crisis, that was a much greater crisis back in 2011, August of 2011, and 48. I mean, those were real crises days. So these things are, in that context, kind of minor. I'm not dismissing the fact, and I said to subscribers, I've got a couple of charts. One is the Dow weekly chart that I've been showing for a couple of weeks. I wonder if I can go to it right here. Yeah. This is this chart right, I hope it's this one, right here. Yeah, this is the weekly chart I've been showing for a while. I thought it would be coming in January. It came in February. There's that peak E high. It was 23 weeks to the peak D top back in August or so of 2000 and there it is, 17, yep, August. And then it was 24 weeks to the high that was made in the week of the 26th of January, that high at 26,616. Really sharp pullback. It goes to this trend line support. It goes to the left side support at 23,242 I just spoke about. That was the November low, the week of the 17th. There should be a bounce, and the bounce should come in like this. The height is a little difficult. You can see a little gray patch there, somewhere in the mid 25,300, 25,600 area. We'll see. It might fizzle before then, but I'm not sure we can get any bad news events building so quickly after what we've just been through. So, good counter trend rally. I'm calling it a counter trend rally. I have evidence to say don't ignore the fact that within the context, let's go to the Dow again, of the monthly chart, this could turn out to be a peak F with no new high at 26,616. But if the Dow actually climbs into the high 25,000s, You've hit that not you, the Dow's hit the 9-period exponential moving average in the monthly chart for the first time since it broke out back in 2016, and it hasn't closed below that since it was below it on a closing basis back in February of 2016, down in the 17,000s. So I'm looking at this and I'm saying there are two scenarios. This is an extremely oversold condition that we had going into Thursday and Friday, especially with that extra kick to the downside on Friday. Perfect. If I look at it historically, perfect for a bounce. 24,920s is the 9-period moving average in the daily. I want to take a little time, talk about it now in relation to what I am anticipating for subscribers. We still hold some long positions, still hold some short positions that have really tanked. One or two should actually have a pretty decent bounce here. The S&P at 2619.55 made a low under the 200-period moving average in the daily chart. That's that orange line. Hit the 200-period SMA, the smooth, simple moving average, right there at 2532.69 on Friday. Should be a bounce to the 2695 9-period exponential moving average. I would not be surprised. Let me move this over here. Why is it stuck? We should have some kind of a pattern like this right here. And I've been drawing in. I drew it in last week. I said expect an H pattern, lowercase h pattern. That's the technique I discussed in my CD introducing the Chapman Wave methodology. This candle of the last week, together with that red candle, says, hey, it's going to take a lot of work to repair this damage. So yes, you can expect rallies. I'm not sure that you can expect to see new highs in the next 2 months. I think that it's a really good rally, and then it should start to fade. But the internal low says that the residual low doesn't necessarily have to take out the low that was made Friday. It'll be an emotional low. It'll be a low that the newspapers have their cameras outside the headquarters of the stock exchange. Everything will be there except the technicals will probably could well have improved by then. I'm just going one step at a time. So let's go on the QQQs. So let me do this. So the E-mini ESU 18 has a very nice move. It's up 30 points at 26.48. It's over 100 points from Friday's low. So that's just, we're talking about a few hours of trading, and it's already done that. So this is very good, and it says 27.05 could even be a test for the bounce coming in the E-mini. As long as the gap up today does not get filled within 2 days, that'll be very good. The QQQs, let's go to the NDX 100 NQ futures. Right here, look at that peak E in the weekly leg. Yeah, I'm not going to call this just a leg C in the monthly, because we went to the NDX 100. You remember I redid that chart, and that chart said, no, it is a D. Think of it quite seriously as a D in the monthly chart. Let's go to the QQQs, because that's the one that represents, it's the trading vehicle for the NDX 100. 170.95 was the high in the 26th. We had a 2-bar Chapman Wave 2-bar reversal to the downside. Plummets to the 150.13 area. Should be a nice bounce, and that bounce should go to the 160 to 161 area, and then we'll have to assess to see how much further it can go. Excellent action. Question in the den about the IYR. IYR right now is the iShares US REITs. Yeah, that should have a bounce. It's a 73.28, but this is not a very good looking chart. So if it has a bounce at 73.28 right now, the 75s will be the real test. With 75 and 77 are moving averages in the weekly chart that should repel it. I'll be back. We want to look at gold. We want to look at the dollar. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
So the question was, do we have the IYR? How can we be confident that IYR, that's the iShares Dow Jones US REITs Index Trust, has bottomed? Will you wait a week for weekly to trade back above the 200 EMA before buying? I said no. I would buy it right here, because at 73.28, let's say it bounces 1.5 points at the opening. Well, it's only a little bit, 2 points. So 71.26 was the low on Friday. That's only 2 points. 74.74 is the 9-period moving average. You should at least try for that. That way you're in it. All you have to do is raise your stop and say, hey, take me wherever you want. My thinking is it's going to have an arch, just like all of them. It's going to have an arch or an H pattern rebound. And somewhere maybe in the 77, 78s, if it keeps rallying, that's where maybe it's going to turn. Maybe you get out, or you can short, or you can hold. That's where you can make decisions. But I don't want to have it rally all the way to where, oh my God, is it going to go up or is it going to go down? This way, you know it's made some kind of a low. If it takes that low out, you don't want any part of it. You put in a decent stop, 2 points on a $73 stock. I think that initially that's reasonable, and if it gets to the 74.30s and you're in it, you can raise your stop and just say, hey, keep going, I don't mind. I don't want to have to rethink it, because it could get to a point where, hey, is this a short or is this a buy? This way, my bias is to say 70% that it's more a buy for the short term than anything else. That's the best way. I'm doing that for my subscribers, the pieces of the puzzle that we want to get into now. I'm just looking to get in. I might even add on a pullback, but I don't want to wait for a rally of 3 days and then say, now what should I do? Okay, so now let's go on. We want to go to the IWM. IWM at this particular point is up 1.12 pre-market at 147.89. Remember, this is a pre-recorded show. It'll be replayed at noon. So some of these prices might be sticking. The IWM is at 147.89. It made a low, a leg C to the downside on Friday. Hit the 142s, is trading right now at 147s. You know, that is a huge move. 5 points. That's big. So I'm not happy about getting this because on Friday we timed it perfectly for the entry, but it was a wrong entry because it was early. Therefore, we got stopped out for a very tiny percentage loss. But I would not have sat there for the 4 or 5 points down afterwards in the diamonds. We just don't do that. So we missed the opportunity, and now we have to go in at a not a good price. Still a better price than in our intermediate term long that we had from the 122s in the diamonds, which we got out at the 246s. So even now it's under that level. So that's good. So okay, next thing I want you to look at is gold. Gold is up almost $6 at 13.21. Hit the 9-period moving average pullback. I just don't see anything in gold at this particular point. I do see that the dollar is just very quietly. It's not great, but it's way off the 88 point. Not way. It is off the 88.44 low of the 26th of January. It's at 90.29. It's made a leg B, possibly a peak B if there's a lower high. But it really looks like the weekly wants to test the 90.83 9-period moving average and then move higher from there. I'm treating it as a short-term. We got it real long. I'm treating it as a short-term position. It might be longer term, but not with much in the way of points, or it could turn out that that actually was a bottom of significance. I just don't know. The pattern is that the monthly chart has hit the 200-period moving average. It went below it last month. It's now above it. The month is not even halfway through. Can't tell anything right now other than that the MACD and stochastic and the monthly charts are improving, but still very weak. The weekly charts are improving quite a bit, but I haven't seen price appreciation just yet. If we can get to 91.30, that'll be very nice for me. EUR USD. Let's go to the euro-dollar currency pair. Pulling back, hit the 9-period moving average of 1.23. Now it's at 1.224. Yep, I just don't see anything right now. And I am going to make this into a Chapman wave. C1, peak C1, and a peak C2. I mean, just look at that. It looks a little bit like those. Looks like the skateboarders last night at the Winter Olympics. Man, can you believe what they do? Can you mean up in the air at that speed? Amazing, just brilliant moves. And some of those ice skaters, amazing artistry and technical ferocity. All right, so the USD JP1, real JPY, this is the yen, the dollar-yen currency pair. Not great. It's at 108.66, really struggling. The weekly chart has got this arch formation. Boy, if this doesn't get to the 110s by the end of the week, that's not going to be good. High-grade copper, nice bounce last night. Yep, still continue at 3.07, but the weekly chart is still very weak. The weak, all right, and that's following through with 3.13, very strong resistance. It's at 3.07 right now. It better hold threes, otherwise 2.999 200-period moving average is acting like a magnet. I'm missing the TLT. So over the weekend, of course, I showed my triple yield charts. Look at this, the TLT at 117.96. It's up 2 cents, made a lower low. I suspect that at some point it's going to have a pretty nice bounce, but only a bounce. And this weekly chart is fading, and the monthly chart has broken support. Whoa, as far as I'm concerned, TNX.X, look at this. The 10-year yield is at 28.77. It has to go to 28.85 to make a leg D. I think there's a chance that it could do that. There's a high-level consolidation, just holding the 9-period moving average of 28.07. That 10-year yield is telling us a story. Look at that monthly leg B to the upside. I think the story this year in the first half is going to be rising yields are going to impact the market. at least at some point. So let's just watch that very closely. If you look at the housing sector, look at this HGX, 320.99. It was trading at 369 just back on the 24th of January. That is a huge decline. This is the deepest decline it's had since the decline back in August of 2015, going from 252 to 184. That's 60 points. That's 70 points, almost 70 points. And it took a little time to do that. So we've got to watch this because it's on the 9-period moving average. I'm watching the housing sector very closely. Okay. A couple of things I was asked about. When I look at the IYT certainly, IYT made a leg D to the downside at 182.63. This is the iShares Transportation Average ETF. Goes from 206 to the 170. Is that a 6? 176.62. Let me just type that in. 162 on Friday. Yes, this should be a nice bounce. And the bounce has resistance of the 9-period moving average of 189 with the other moving average right there, the 50-period. Oh, no, that's not. That's the 14. Yep, that's the 14. The 14-period exponential moving average of 192. Should be a good bounce. Aha, which takes me to crude oil. Almost forgot. Where's crude oil? Crude oil is up $1.24 at 60.43. It's matching what we're looking at in the market. Very oversold on the daily. Weekly chart, very ugly chart, suggests it should go to lower prices after a bounce at 60.43. The 62s offers a lot of resistance. We're going to be watching this one carefully. Basil Chapman, Tiger Technicians Hour for the 12th of February. This is at 8:30 a.m.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So if you're looking at stocks right now, this is actually at 12:30 in the afternoon. It's being recorded at 8:30 in the morning. Yeah, and you're looking at Amazon. Say Amazon at 1,364, up 25, made a peak D at around number 1498 on the 2nd of February, and it's gone to a leg B, hit the 50-period moving average support. MACD's negative, stochastic is kind of negative, but when you look at it on the weekly basis, this looks as if this is just a normal retracement, and the monthly chart is still in leg E. So Amazon is one of those stocks that's just holding really well. Yes, it did go from 1498 to 1265. 1265. Yeah, 200 and something points. That's a pretty steep decline in percentage terms, a lot of points, but not when you're looking at it historically. And look at this monthly chart, still holding the 9-period moving average, hasn't even gotten close to it, had a doji candle, and then took off to the upside. MACD is strong, stochastics at 91%. I suspect that Amazon is going to be a pretty good clue as to what happens in the XLK, which is the S&P Select Tech Spider Fund, which is, now this one I really have, I'm calling it a C. I would like to give it a D to be in parallel with all the others. But I must say that the technicals and the monthly chart are, MACD is still strong. The stochastic at 92% is really good, but it is turning down. So this is going to be very important. And the weekly chart says, hey, that was very serious in the XLK, going from 69 down to 61. That's 8 points. So what is that, about 11, 12% a decline? Hey, it hasn't had that kind of decline since way back in August of 2015. That was a much deeper one, of course. But this is the first time it's hit the 9-period moving average. So that's like a warning across the bow. Just say that the XLK, made up of many of the high techs. I mean, you can let's go to a Cisco. Haven't updated this for a little while. Cisco D in the leg D in the monthly, a peak F in the weekly, and that was an E. That was an F in the Chapman wave methodology, serious top in the daily. So these charts are all saying, hey, we need a little time. We can have a fabulous bounce at this particular point, but I'll draw it in one more time. In this particular chart, it's the same pattern, lowercase. Yeah, it could rally from the 40.51 area to the 42s. I'm not sure it can break to a new high, but it's been one of the leaders in the Dow. It's really important. Let's look at Adobe, and this Adobe is just kind of independent, doing its own thing. Leg D in the monthly, a G/C in the weekly chart, made a peak E top in the daily. This is more a high-level consolidation than anything else. That looks very much like the Amazon. So Adobe doing very well. They bought Tube Mogul. I think that's benefited them a lot. They were doing very well, and now having a bit of a consolidation. So it goes from the 204s, 204.45 on the 23rd of January, down to 179. I would say that's a pretty steep pullback. But look, it's done this before, and a stair-step move to the upside. So let's watch these very closely. It's trading at 190 right now, up 214. This is one of those better-looking stocks. I wanted to show you stocks that have held well. I'd like to look at Berkshire Hathaway right now. Berkshire Hathaway, B shares. Whoa, what happened? Oh, I just haven't updated it. That's right. So I'm looking. So this is a G/C in the weekly chart, and it's an A, B, C, peak D. Peak D right there on the 29th of January at 217.62, trading at 198.40, up 2.38 from Friday's close. Yeah, this is in that monthly chart leg E. It's still an E, I believe. Yeah. So this is going to be very interesting because stocks like Berkshire Hathaway, well, this is the U.S. economy. This is going to be very important because it broke sharply under the 9-period moving average in the daily and weekly. It hit the 9-period moving average in the monthly and is rebounding off that. So we'll be watching this because this is America. This is insurance, it's in banking, it's in rails, it's in everything. Talking about rails, let's look at CSX. CSX goes from just on 60, goes down to the 49s, trading right now at 51. Yep, that's a much deeper peak E. This peak E says this is much more serious in the weekly chart, and that could impact the monthly chart, CSX rails. There are a couple of stocks that I think are very important at this time to be monitoring. Most importantly, what I am looking at is that the XLF, with the yields continuing to rise, the XLF has held really well, but it has made a peak E at 30.33, the S&P Select Spider Fund Financial, and it made a peak D in the weekly chart. But the MACD did not cross negative. Stochastic still at 88%. It held the 9-period moving average. The financials, I think, are the areas to be both the regionals and the major banks. I think this is something to watch. If you go to the KRE, right there. KRE goes to a peak E right there in the daily chart at about 63s, and then turns down, comes back, tests the 59s, it's at 60.82, up 77 cents right now. High level consolidation. The financials, I think, are still the place. So keep that in mind. And now I think what I'd like to do, so we do financials, sector funds. I want, steel, SLX. We're out of the steels right now. I just don't know if the infrastructure play is going to be able to be pushed right at this moment. If it is, they should be back in play. High-level consolidation in the monthly going above the 200-period moving average, trading at 46.26. This is the Van Eck Vector Steel ETF at 46.26. Having made a low in the 44s yesterday with a high at 51.40, triple top actually, starting on the 12th of January. 7 points, 12%-ish pullback. I think that is going to bounce and do some retesting unless something really exciting happens. Look at X. X is U.S. Steel, makes a peak D in the 41s, pulls back to the 32s, trading up 89 cents right now, 35.13. I think this has to be thought of as an infrastructure play, and I'm not sure the Democrats are now going to be in a position to say, hey, President Bush, we're going to be with you on this. They're not going to make it easy, and I think that's going to have to wait a little while. That's just my thinking here, and maybe that's the shoe that drops after the nice big 2 or 3 week maybe rally, and then we suddenly say, oh, oops. What's going on? Now, I had a question over the weekend about a volume. If you look at, what can I look at here? Let's look at the diamonds. If you look at the diamonds, you see this volume spike right here on the 9th? It's not as big as it was back on the 6th of January. If you look at the SPY, and it's funny, it goes to the different sectors, it's pretty much the same thing. QQQ, that almost got there, but it isn't. I like to see what I call a Chapman wave volume reversal spike. And that says you make an emotional low, a pretty serious low, at the same time as volume screams to the upside. Then you get a 28-day rally. We'll see what happens here. I'll be right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi, folks. So I always talk about wood, which is the iShares Global Timber and Forestry ETF. So that had a really sharp pullback from the 77s. It pulls back to 70, so it's about a 10% pullback. It's trading at 71.50 now, down about 34 cents. That's because it has overseas implications. But this as well is looking very much like a high-level consolidation. I am calling this a peak. See, I don't see any other way I can call it in the monthly chart. That's very bullish. And so far, just it was well under the 9-period moving average of 73.32 in the weekly and 73.82 in the daily. So I think these are going to be the clues. Things like wood, things like the HGX, the home builders, things. I mean, if you look at the home builders, Toll Brothers, where's Toll? Toll has gone from 52s to the 43s. That's one of the biggest declines that it's had since back in, I think it was August or so of 2015. So what happens here with the home builders? Is this interest rate scenario of higher yields going to impact? I think it will. Will it impact it for a while? I don't know. Apple is going to be important here because it's pulled back to a leg D. It hit 150.24 on the 9th, on Friday. It was, in fact, at 180, so that's 30 points. Was it 28%? How much is that? 28 from 18. Oh, that's about 18% correction, nearly 20%, I think. Just thinking off the top of my head. So we're looking at Apple as one of those that says could be a good struggle, but at some point in 2018 it should go to a higher high. It needs to complete this consolidation. And this consolidation has 163s. 161 to 163 will start the resistance area. And if you're looking at the, I wanted to do Apple. I wanted to do also a very important stock, just thought of it a moment. Oh, Teledyne. You know, this is a very interesting thing. Teledyne, this is multinational. It's in mostly semiconductors, but they're in everything. And trading at 179 right now. it's gone down to a leg B of 172.80. It was at 201.40, so that's a 30-point decline, 25-point decline, 25-point decline, and so far it looks like a high-level consolidation. So if you're looking at the SMHs at this point are up $1.40 at 99.14. They went from 108.56 to the 93.88 level, just off the 93.32 200-period exponential moving average. We are still short. I'm still holding that short for now. I could have flipped to the long side because I think it's going to be a really nice bounce, but we've already taken off 2 positions for huge gains. I see this as the weekly chart saying, hey, something's going on in the semis that could, in fact, have longer lasting negative action that will impact the Qs, that's the NDX 100, and the XLK at some point. So I'm watching it to see how does it handle a big rally into the 102s, maybe even the 104 area. If it does that, can it hold? It's going to be very, very important because they led the market up and down throughout the last 2 years, and they are showing that this is probably a deeper consolidation by the action that we've just seen, because it went lower than the 95.92 low that was made back in the week of 8th of December, went to 93.88. So how it bounces is going to be really important. A couple of things I wanted to talk about, which I haven't. I wanted to hold off a little bit. If you look at the VIX index, the VIX screamed to 50.30. So I did mention that that was very unusual action. But what I did want to also mention is that even with Friday's turnaround, the VIX closed the week for the second time way above the 200-period moving average of 1423, way above the 9-period moving average of 1751. In the weekly chart, it hit 50.30 and closed at 26 week of the, this is the week of the 16th. Oh, that's right now. And closed at 29.06. It's trading now at 26.39, down 2.67. The steepness, the speed, and the price action support that we're looking at if the VIX index is able in the next day or two to close under 22 would suggest to me that there's going to be quite a bit further to go in the market. I do not like, everything was kind of out of reach for many people Friday. Friday, there was this terrible decline, 500-point decline. Actually, it was about 800 from the intraday high, and then it went 800. It turns around and closes up 300 and something points in the Dow. Well, that means that most people on Friday missed. If they were getting out, they're now out, but they haven't had a chance to even get in. And if they were in, they got a terrible scare. Maybe early Friday, they just started getting out. But the action over the weekend, where the futures are now 28 points higher, and market hasn't officially opened because I'm doing this pre-opening. This is 8:48 in the morning, Eastern time. So what do? Most people wouldn't want to buy a gap up like this. I find that if I'm correct in my assessment of a very strong rebound, the only thing you can do is to buy the very next day, right at the opening. And then you can add a position on pullbacks. But if you wait on the second day, that is Tuesday, what if there's another gap up? You're just way behind. You've almost lost the opportunity of what can happen next, because maybe a bulk of the move has gone from the low on Friday to the high of Tuesday or Wednesday. And then what do? So I find that this is the period that I want to be in. I'm overpaying. I mean, we had a fabulous entry point on Friday. Then it looked horrible because it dropped 5 points in the diamonds. Then it closes above. And now it's at the diamonds at almost at 245. And you're way off the low that was made. Look at this. The diamonds makes a low of 233.76. It is now over 11 points higher. That's 1,100 points in the Dow. That's huge. So it makes it difficult. Why? Because if this is going to be a retracement rally, then we've got to be looking at the 249 to 251 as the area of the big test. Is it going to break out or is it not? Now, I have two scenarios. One is that there's the pattern I showed you earlier, where we have a big bounce and then we come back and we do a retest, internal low, residual low, think earthquake and aftershock. But what could happen, and I'm not going to rule it out, even though everything says that we should be having a bounce and a retest at some point, the low that was made Friday might turn out to be the low and not a low. And we won't know about the low or a low for a little while. I'll be right back with the final segment. Hold tight. S&P futures up 28. We'll be right back.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earned me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So if we're looking at the BTC USD, this is the Bitcoin, I've got it trading at 8681 right now. I think that it was telling us last week that there was some kind of an internal low that it was making and that it could move higher. And it's gone to a leg A, and that A is, if that's correct, right there at 9074 3 days ago, and anything above that starts leg B. technicals are starting to improve. So yeah, finally you can get something going in Bitcoin. That's probably going to impact Riot, maybe even Riot. Let's have a look. Riot blockchain trading at 1708, up 1.03. Yep, it's the same chart almost. So it's making a leg B. So yeah, I think that Bitcoin could have a little bit of a rally this week. So remember, this is a pre-recorded show. This is, in fact, a few minutes before 9 o'clock. You'll be hearing it a few minutes before 1 o'clock. So keep in mind that anything can happen. The futures have gone up from plus 30 to about plus 21 right now. The Dow futures were up in the 200s, and now it's up 192. I would not be surprised if there's some kind of a gap to the upside, some kind of a pullback, but the market closes really well, and then maybe follows through tomorrow. That's kind of the way I'm looking at it for subscribers. And as I said before, trying to get into the market after two big gaps to the upside would be very tough. So if you are intending and playing, and I'm treating this as a bounce at first, I have no choice, even though we're extremely oversold. I'm treating it as a bounce based on the VIX index that I just went through. This could not be just 1 or 2 weeks. It could be many weeks before the VIX index actually goes back to those highs. But if it's an internal low with a residual low still to come, that VIX doesn't have to go quite as high next time because it's the aftershock. It doesn't have to be as impactful as, say, Friday's low. So let's just keep in mind what we want to see is that the Dow, when you're listening to the show in the post recording, that's just before 1 o'clock, you want to see the Dow up at least 150, 160. You want to see the S&P up very strongly, hopefully up about 18 points. And that would say, good, the bounce is continuing. Have a great day, and I will see you on Tuesday. Thank you for being here. Stay tuned.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.